the food business is over 50% of Walmart's business, and with double-digit inflation in food is 6%.
Walmart did beat on the top and bottom line. It said it expects earnings per share.
Target stock down 4.5%, Costco down about 2.5%, Amazon down over 3%.
Company for the year ended up about $560 billion in sales on the top line. We layered on.
As the U.S. economy faces the possibility of another recession, the global retail giant Walmart is experiencing a significant decline in profits. Even a small dip in earnings for the world's largest retailer can translate into substantial financial losses. Unfortunately, Walmart's latest financial report shows a drop in profits by nearly 25% compared to the previous year, indicating that the company is facing more significant challenges than previously anticipated. The retail giant is losing its appeal among consumers, and significant gaps are starting to emerge in its business model. Although the company has been able to keep its financial woes under wraps by addressing specific problems in different regions, a closer look at the data reveals a company in serious trouble. Analysts such as Travis from Smartly Fools have pointed out that Walmart may be the latest in a long line of leading retailers to suffer a sudden and dramatic decline. In today's video, we'll be presenting a compelling collection of data, including numbers, facts, and statistics that demonstrate Walmart's declining fortunes and 15 indicators that suggest Walmart's glory days may be a thing of the past. Number 1. Amidst economic uncertainty, Walmart anticipates a decrease in the performance for the year 2023. Walmart's strategy to clear unsold inventory will require reducing prices on a range of products, impacting its earnings during the busiest shopping period of the year. Walmart is facing an uphill battle due to the rising cost of basic necessities, leaving shoppers with less disposable income to spend on discretionary items like clothing. This presents an uphill battle for the company as it tries to keep up with changing consumer behavior and compete with online retailers. Number 2. Walmart stock was currently trading mostly below its 50-day and 200-day moving averages, indicating a concerning trend of underperformance compared to its peers. This suggests that Walmart's share prices has been on downward trajectory for an extended period, raising concerns about the company's ability to compete in a rapidly changing retail landscape. The factors contributing to Walmart's underperformance include rising inflation, supply chain disruptions, and increased competition from online retailers. Walmart faces huge turbulence to regain investor confidence and stay relevant in an increasingly competitive retail environment due to changes in consumer behavior, such as the shift to online shopping. Number 3. The significant decline in the stock price highlights the challenges that Walmart is facing as it seeks to adapt changing market conditions. Given the importance of earnings to shareholders, it is unsurprising that investors are upset about this news. The decline in earnings per share is likely due to a combination of factors, including rising costs, supply chain disruptions, and increased competition from online retailers. These challenges have forced Walmart to lower prices on many items, reducing profit margins and putting pressure on the company's bottom line. With these headwinds, it is critical for Walmart to develop effective strategies to address these issues and restore investor confidence. Number 4. Walmart's financial challenges are underscored by its announcement, where it forecasted earnings for the year through January 2024 are between 5.9 and 6.05 per share, below analyst estimates of 6.5 per share, according to Refinitiv IBES data. The rise in U.S. consumer prices and higher cost of rental housing and food has raised concerns among executives, leading to fears that the U.S. Federal Reserve could further lift borrowing costs to cool domestic demand and result in an economic downturn in H2 2023. However, Walmart shares rose 0.4%. The shift to online shopping has also taken a toll on Walmart's profitability as it struggles to keep up with e-commerce competitors. Number 5. Following the announcement, Walmart's shares plummeted by 6% in a single day as predicted. Walmart stocks has rebounded, but it's still near the lows of a consolidation pattern. This decline is due to concerns about Walmart's ability to navigate the current economic landscape, including supply chain disruptions and rising costs. Additionally, Walmart must overcome competition from e-commerce giants and changing consumer preferences for online shopping. It remains to be seen if Walmart can restore investor confidence and regain momentum. Number 6. Walmart's recent financial troubles extend beyond just declining profits, as the company's free cash flow for Q3 was a concerning negative $7.3 billion. This is a worrying sign for investors, as negative cash flow indicates that a company is spending more money than it's bringing in. In fact, this is the first time that Walmart has experienced negative cash flow from operations since Q3 of 1995, more than 25 years ago. Historical data provided by S&P Global Market Intelligence shows that Walmart did not generate any cash from operations in the past quarter, instead consuming $3.8 billion along with $3.5 billion in capital spending. These figures reflect the significant financial pressure that Walmart is currently facing, which may impact the company's ability to invest in growth initiatives and compete effectively in the marketplace. Number 7. Walmart's recent market performance is not the first time it has faced a significant downturn this year. In May 2022, the superstore chain experienced its worst one-day decline in history, with shares dropping 11.7%. After releasing a weak earnings report for its first quarter. The company reported earnings of $1.3 per share, far below the expected $1.48 per share profit. This unexpected drop in earnings reflects the ongoing challenges that Walmart is facing, including rising costs, supply chain disruptions, and increased competition from online retailers. Moreover, the pandemic has further accelerated the shift to online shopping, creating additional headwinds for Walmart's traditional brick-and-mortar retail model. These factors continue to pose significant challenges for the company as it seeks to regain its footing and restore investor confidence. Number 8. Walmart's recent lack of cash flow has been a major concern for investors and executives alike. During a post-earnings conference call, company executives acknowledged that the issue was primarily due to the fact that the company invested heavily in building inventory in the first 2 quarters of the year, and the cost of that inventory has since increased due to inflation. Unfortunately, the more expensive items the company purchased aren't selling as quickly as anticipated, leading to a massive inventory backlog. To address this issue, Walmart has scaled back its exposure to certain markets, including electronics, home, and sporting goods. The company has also canceled orders worth billions of dollars to better align inventories with consumer demand. Number 9. As the largest employer in the country, Walmart's hiring practices are closely watched. However, it appears that the company is slowing down on seasonal hiring. In fact, Walmart's seasonal hiring total is down a staggering 75% from last year, with the company only adding 40,000 seasonal employees for the crucial holiday shopping season. This is a stark contrast to the same period in 2021, when Walmart added 150,000 mostly permanent and full-time associates, along with 20,000 supply chain workers who had not yet started their jobs. The significant decrease in seasonal hiring suggests that Walmart may be struggling to maintain cost and maintain profitability, which could have negative implications for both employees and investors alike. Number 10. Despite being the largest retailer in the world, Walmart's projected 4% sales growth for the final quarter of 2022 is seen as disappointing, given that its monthly sales have grown by an average of 10% over the past 3 years. As a result, investors are concerned about the company's increasing financial losses. The stock checkup reveals that earnings have fallen by an average of 4.5% over the past 3 quarters, which is significantly lower than the 25% growth expected by investors. The company's recent struggles and underperformance have also led to a decrease in investor confidence, reflected in the decline of Walmart's stock value. Number 11. Walmart's latest move of laying off 200 of its corporate staff in a single month reflects the retailer's growing concerns over inflation and declining consumer spending. The company cited storage expenses due to a backlog of shipping containers and inflationary prices, prompting the store to identify cost-cutting measures. These measures come as Walmart grapples with a range of challenges, including a shift toward e-commerce, a growing gap in pricing with its rivals, and the high cost of maintaining its massive brick-and-mortar footprint. Number 12. Goldman Sachs analysis has found that Walmart supercenters are struggling, with customers increasingly favoring convenience stores over one-stop shops. Same-store sales at giant megastores fell by 3% in the third quarter of last year compared to the previous year, and foot traffic at Walmart's U.S. locations decreased by 2.1%. Consumers, particularly baby boomers, appear to be prioritizing convenience, according to CFO Charles Hawley, seeking a combination of value and ease. Goldman Sachs predicts that big box stores like Walmart and Target will gradually decline if they fail to adapt to changing market trends. The company's most recent earnings report was a train wreck, leading to major losses, and the retail chain is experiencing a bad losing streak. Number 13. Walmart's supply chain has been a challenge for the company for a long time. While it excels in mass transportation and bulk discounts, its operations were primarily created to maintain the inventory of its megastores fully stocked with products. However, the company falls short in terms of schedule reliability and on-time delivery. E-commerce retailers have an advantage over Walmart in terms of supply chains, as they can create more efficient and effective supply chains that offer superior customer experiences. This is due to their ability to create more efficient and effective supply chains that offer superior customer experiences. Number 14. Walmart, once known for its unbeatable low prices, is now facing a new reality, losing the pricing war with its rivals. The company has been struggling to keep up with the competition in the e-commerce space, where rivals like Amazon and other online retailers have a cost advantage. Walmart's income statement is weighed down by expenses related to its physical stores, which are not a concern for e-commerce retailers. Walmart needs to adjust to the new market reality and find ways to reduce costs and stay competitive to remain competitive. Number 15. Despite Walmart's reputation for low prices, the company's CEO, Doug McMillon, recently issued a warning that may cause concern for shoppers. McMillon revealed that the company has seen double-digit inflation on the food side, and he is concerned that inflation may continue to rise. The rise in grocery prices has caused customers to spend less money at the retail giant, as grocery prices have increased by 21% between July 2019 and July 2022. While Walmart has traditionally been known for its low prices, the current inflation trend is proving to be a challenge for the company and its customers alike. We hope you found this information insightful and thought-provoking. Now, we want to hear from you. Do you think Walmart will really disappear this year? Or do you believe the company has the ability to adapt and overcome its challenges? Share your thoughts in the comments section below. Also, don't forget to hit the like button and subscribe to our channel for more informative content. We appreciate your support and look forward to hearing from you.